Hey everyone, Steve Fernandez here with Winning Investor Daily. Today I'm going to be talking to you solo. My colleague Ian King, who I usually do these videos with, is on vacation for a couple of weeks. So I'm going to take this opportunity to talk to you about a very important topic. I ask that you stay with me. It can be boring for some, but it's very important, for the markets, for your portfolio, and even for your everyday life. So you may have guessed it, this topic is inflation. Now, I don't want to talk so much about the mechanics of inflation. I have a background in economics, so I can get carried away there sometimes. More importantly, I want to talk to you about inflation, what this means for the market, and why I think this is an opportunity to really dip your toe in or add to some of your good positions that you plan on holding over the longer term. So before we touch on that, before we get started, I ask that you please like our content if you like what I have to say. And if you haven't already, or if you're new to the channel, definitely subscribe. You don't want to miss anything that we churn out every week. I'd like to think that our viewers have gained a lot of value from these videos, so go ahead and subscribe for sure. So let's go ahead and get started here. You probably heard, if you follow the markets a little bit, that the Federal Reserve Chairman, Jerome Powell, came out and said, he changed his course. He said that inflation is not really transitory anymore. He asked that we, quote unquote, retire the word. So implicitly suggesting that he sees inflation persisting at a higher level for longer than he initially expected. So, I think that this could be a net positive for certain stocks, and I'll touch on that in a second, but I don't even think that the market is too surprised about this news. Yeah, we have seen, some volatility pick up in the broad market. For example, the S&P 500 has been relatively volatile over the past week. But if you look at the divergence in stocks, even over the last 6 months, you can see that really the only stocks that were doing well were the mega caps. So if you look at this chart here, you can see that the S&P 500 has done relatively well over the last 6 months versus the Russell 2000, which is, the smaller cap stocks in the US market, which have actually lost about 5% over the last 6 months. So to me, that really suggests that, the market, or the people that are driving this market, really knew that inflation was probably not transitory. And really the only the only stocks that were doing well were the mega caps. So you can see this as a flight to safety, if you will. That's what I would call it. In the past, flight to safety has really been moving to like lower risk, currencies or lower risk debt. So like bonds. But, now that kind of means flooding into these mega cap tech like Google, Facebook, Amazon, Apple, these companies that some people perceive as being too big to fail. So I don't think that this is a surprise. Now, we have seen, like I said, that move lower recently here. I think a lot of that is just the financial professionals that are unfortunately running this market that are kind of conditioned to sell on this, inflation fears. And obviously, if you know anything about like financial modeling, higher rates, which is generally a product of inflation, they impact a valuation. When rates go up, valuations of stocks typically go down. So, we're kind of trained as a market here to price these stocks lower just because that's how we were conditioned or taught. So that's actually kind of interesting if you're in companies that A, don't really have negative impacts from inflation, or B, they don't need to, go issue debt at a higher rate to get capital to grow their businesses. They can just sell stock, in the market. Now, as a whole, I think that we will see some volatility here. We got kind of accustomed to really just seeing a slow, steady price increase over the last couple of months. And that's really not how the market typically trades. Generally, we're going to have some pullbacks like we have here. At least looking at the large caps, it's really just a pullback. I think we're about 4 to 5% off all-time highs. To me, that just implies that people are taking a little bit of risk off, which makes sense when you look at the chart here. You can see that the S&P 500 in the market has really been climbing nonstop for a while now. So one thing that I do want to look at and I mentioned I think some companies will do good in a high inflation environment, is the difference between a company and a stock. So like I said, we're kind of trained to price stocks lower when inflation goes up or when we see higher rates. But that doesn't mean that the companies themselves are struggling. In fact, some companies may actually really see a boost to their business from inflation. Now, you've probably heard about like the commodity based businesses where they're producing commodities. Obviously that's been priced in. We've seen those stocks do really well and outperform the market, for almost a year now. But I think that you also may overlook that growth stocks, specifically companies that either have a big portion of their costs in labor, for example, a software company, they're not going out and they don't have to really buy, goods to produce a product or service. They actually just really need software developers or talent or marketing to really push their product out there. So their input costs aren't really rising that much with inflation. Maybe just the labor will be the cost that rises. So they can either A, pass off some of that cost to their consumers, or B, they're going to keep churning out bottom line growth as long as their revenue keeps growing. So that's an interesting place. Software companies are companies that have really low, input costs. Another thing to consider is when inflation occurs and we see higher prices in things like oil and gas, like we're seeing now. Well, that adds value to the alternative goods and services, in this case, electric vehicles. We all know that, vehicle prices are going up in part to the semiconductor shortage that we're seeing because of the influx of demand for EVs. But keep in mind, part of that calculation that these people are running through on their next car is how much is it going to cost me versus, a traditional internal combustion engine car. So when oil prices are higher, gas is higher, obviously EVs become more attractive on an economic level. Also, powering your home. Ian King and I are really bullish on EVs, but also renewable energy. So solar is probably the best play on that. And, people don't have to deal with higher natural gas prices. They can just put solar panels on the roof and in most cases get paid by the government to do so, and in the form of subsidies or tax credits. Also, another group of stocks that I think benefits here is, companies that provide alternative solutions to manufacturing or alternative materials. So for those companies that do have high input costs, they need to figure it out. They need to figure out how they can, basically offset some of that cost. And in a lot of cases, it's things like 3D printing, because 3D printing requires, less materials in the sense that it wastes less materials. And also 3D printing allows companies to really drive their prototypes and build these prototypes fast and efficiently. So that becomes more attractive when the materials that they're using get more costly and they really just need to cut costs somehow. So those are three areas of the market that I like. I said, software stocks. I said alternative goods, in this case, like EVs or renewable energy. And also I like, alternative manufacturing. So in this case, 3D printing. Now, like I said, I do see some volatility in the markets moving forward. I don't think that we're, in a temporary drawdown here. That doesn't mean that we're not going to see a rise either, but I think we might have some volatility here over the next, 1 to 3 months for sure. But what that does mean is that when the market, reprices some of these stocks lower, it's really a good time to buy these companies, kind of like I just described, or really just the companies that are really here to stay over the long run. This is, even if they do have a little bit of effect from inflation, it's really their stock that's getting hit right now. It's not the company. The company will continue doing well. The lower stock price is an opportunity to add either an initial position or add to an existing position. So a lot of these opportunities I see long-term are in growth, but I think that you should take this as a buying opportunity. So I'm going to leave it here. Thanks for tuning in. Ian King will be back in a couple weeks, so you should have the back and forth conversation then. But tune in next week, and we'll talk to you soon.